The motion is adopted.
For those who felt that this was surrendering their sovereignty, this was in fact pooling in of sovereignty of the states and the center.
Let me go on record. It is hugely inflationary and there will be a huge backlash if you raise the service tax rate from the current 14.5 to about 23 or 20.
GST का मतलब है great step by in India.
The entire taxation base will be shared between the assessment and machinery of the center and the states.
I'm happy to say that 26 proposals have been accepted by the centre. That means federalism in this country, we have been able to, on behalf of states, uphold today.
Of the 5 before Central Parliament, 4 are to be cleared by the GST Council, which they have done. That's the CGST law,
Yes.
the IGST law, the compensation law, and the UTGST law.
Yeah.
The 5th one is because consequential changes are required in all our other tariff laws. So that's also been done. That's also been approved by the cabinet yesterday, the 5th law. So hopefully all 5 should be before Parliament next week.
I seek move for leave to introduce a bill to make a provision for the levy of collection of taxes on the interstate supply of goods and services or both by the central government and the matters connected therewith or incidental thereto.
The goods and services tax is inching closer to its rollout date of the 1st of July 2017. As we reported here on CNBC TV 18, the government has tabled the GST legislations in Parliament today and slotted 7 hours for a discussion on the bills on the 29th of March. Good evening. Thanks very much for joining us on this special edition of the goods and services tax One Step Closer. I'm Shereen Bhan. As I mentioned, the government has moved 4 crucial GST bills in the lower house of Parliament, and these include the Central GST Bill, the Integrated GST Bill, the Union Territories GST Bill, and the GST Compensation Bill. Now, these 4 bills have been introduced as money bills, which essentially means that they do not require the approval of the upper house. Now, soon after these 4 bills were tabled in the Lok Sabha, CNBC TV 18 caught up with Santosh Gangwar, the Minister of State for Finance, who said the crucial issue of rates will be discussed after the next meeting of the GST Council on the 31st of March.
जीएसटी काउंसिल ने जैसा सुझाव दिया है ये हम उसी को ही पेश किए हैं। जीएसटी काउंसिल इसमें अंतिम फैसला लेती है। रेट्स भी जीएसटी काउंसिल में सारे तय होंगे। मुझे लगता है कि जैसे अब तक सारे फैसले पूरी आम सहमति से हुए हैं और आगे भी ऐसे ही फैसले होंगे।
सर, लेकिन अभी जो 4 टियर रेट स्ट्रक्चर जो डाला गया है उसमें क्या आया है अभी तक?
ना, रेट स्ट्रक्चर जो है वो तो अब सबकी जानकारी में है, पर किस चीज़ को किस रेट स्ट्रक्चर में रखा जाए ये जीएसटी काउंसिल ही अंतिम रूप से फैसला लेगी।
Well, that's the Minister of State for Finance saying that rates will be taken up after the meeting of the GST Council on the 31st of March. Before we get to our panel of experts to decode the fine print of the GST bills, let's take a quick look at the salient features in each of these bills. Let's start with the Central GST or the CGST bill. So let's bring up those graphics for you. The supply of all goods or services, of course, that's the objective as part of the CGST bill. E-commerce companies will be collecting tax at source. That's another part of the provision of the CGST bill. Let's move on now to the other provisions. The GST Appellate Tribunal, that is a provision that the government has talked about as part of this legislation to set up the GST Appellate Tribunal. This is the controversial clause, the anti-profiteering clause, to ensure that companies actually pass on the benefits to consumers. Elaborate transitional provision. This, of course, is what requires clarification, especially as far as the unsold inventory is concerned. So this is going to be something else that we will need to clarify. The IGST bill covers the interstate supplies of goods and services. Let's take you through some of the key highlights as part of the IGST legislation. The tax on imports of goods and services is a part of the IGST bill. The grant of exemptions, of course, now what will be the final as far as some of those crucial exemptions like the area-based exemptions are concerned, that is something that needs to be worked out. Determination of the nature and place of supply, and also moving on to the transfer of input input tax credit. Remember, this is going to be very, very crucial to ensure that the entire supply chain, there are no loopholes, there are no leakages within that. Compensation bill, that's also now been tabled in Parliament. The base year of the compensation bill is FY16, so this has now been amply made clear as part of the legislation's revenues to be subsumed under the goods and services tax. And as far as the compensation is concerned, the growth of revenue subsumed at 14% per annum. That is the projection that the government is working with. The compensation shall be released bi-monthly. Again, this was a demand of states which was adhered to by the GST Council. The cess to generate resources for a period of 5 years. Again, a demand of states which the Council approved and now part of the legislation. And the government also very categorically once again specifying what will be the products that will fall under the cess bracket. So there are no surprises there as far as the GST is concerned. For more on the highlights from the GST bills, we're now joined by our colleagues Sapna Das and Rituparna Bhuyan, who've been tracking this very, very closely. Ritu, Sapna, take us through the key takeaways.
The biggest amongst these four bills is the CGST bill with 21 chapters and it has 174 clauses. Then you have the UTGST bill with 9 chapters and 26 clauses. The IGST bill has 9 chapters with 25 clauses, while the compensation bill only has 14 clauses. Now, let me quickly take you through some interesting highlights that I saw in the IGST bill. For example, the CVD and SAD, which is now levied, that will be subsumed into IGST, which means that only basic customs duty and IGST will be levied on goods imported into India. In addition to that, supplies to SEZs, that will be zero rated. Also, for supply of online information and database access or retrieval services, IGST will be applied. Last but not the least, any foreign tourist who buys goods in India while moving out of the country will be able to refund those taxes through the IGST mechanism. But Sapna has more on the CGST bill as well as the compensation bill. Sapna, I understand that there is a anti-profiteering clause as well in the CGST bill.
Absolutely, Ritu. Well said. Well, you have summed up most of the points as far as the IGST bill is also concerned. But I suppose, would you like to say anything on the zero rating? I think that's something that you wanted to take up.
Well, zero rating is something which the Commerce Ministry has been demanding. However, it has been agreed only for SEZs, which means that supplies to special economic zones, you do not have to pay any taxes. That will be exempted. No, the GST taxes will be applicable on supplies made to special economic zones.
Yeah, that's again an important clarification. And as Shereen has rightly pointed out, most of these provisions do not actually give any reason for surprise, so to speak. Just a few points I would like to make, especially in terms of the anti-profiteering clause. Well, after the 16th March GST meeting had been over, it had been indicated that yes, this provision is definitely there. But the mechanism, what will be the mechanism for setting it up? There will be an adjudicating authority that will be there. But what that authority will be, under what circumstances will this provision kick in? But clearly the government at its end is trying to ensure the fact that as and how the tax incidence from the benefit of input tax credit kicks in, that should be passed on by businesses to consumers. How they'll ensure that is a question that is yet to be answered. The other aspects are more or less very clear, but very quickly on the compensation law, here again it clarifies that any residual amount that will remain after 5 years, and it remains to be seen whether any compensation will be required after 5 years, or probably the compensation may end even earlier than that. Well, that amount will be shared on a 50-50 basis between the centre and the states. Also, those 5 to 6 categories of products are very much clear on which the cess will be levied at various rates. Of course, the specific rates of cess will only be decided by the Fitments Committee once the goods and services in the various tax slabs have been, agreed upon, which is basically pan masala, tobacco and tobacco products. Here again, it will be specific and ad valorem, combination of both. Aerated waters and motor vehicles, luxury motor vehicles, 15%. Coal cess, 400 rupees per ton. And the 6th category that they've kept open is any other supply that may be required. So they have kept a window open on that front. Very quickly on the CGST front, Shereen has again pointed out the TCS for e-commerce will be around 1%. And what it basically means is the clear subsumation of all the state and the central taxes. Basically, of course, under SGST, and under CGST. So all the state level taxes like your entry tax, your luxury tax, your excise, at the center level VAT, so on and so forth, all of that stands subsumed from the day that GST actually rolls out. But the fine print, probably it's the tax experts, it's the expert panel that will be able to speak more on that.
Well, yes, Ritu and Sapna, we do have our tax experts here with us to examine the fine print. And as they say, the devil is always in the details. So let's see if we do come up with any shockers. Thanks very much, Hari, Mani, Pratik, and Mr. Shah for joining us here on the CNBC TV 18 special panel. Between the 4 legislations that have been moved in Parliament today, there are over 200 clauses altogether. So I don't know how much of the fine print you gentlemen have been able to go over. Hari, let me start by asking you, anything in the fine print that surprised you so far?
Shereen, like you rightly said, multiple clauses, 4 legislations. Frankly speaking, I have not been able to go through it. All that I know is what was there in the past and what we've been hearing right through till this law became public now. By and large, not too many surprises. But having said that, from what I'm hearing from our team is there is still quite a few changes, in the fine print, and that's what we will probably pour over in the next 24 to 48 hours, So most of the things that
you want to very quickly take us through the big headline change that. What is your team telling you about any key headline change?
No, I've not. No, I've not heard. I've not heard the granular detail, and I think it will be unfair to kind of speculate on the changes because I have not read the fine print. Frankly, I've just walked into your interview. But a couple of things that we've heard is, like you said, in the previous law, there was a confusion on how the treatment of SEZ will be. So that appears to be zero-rated, which means fundamentally suppliers to SEZ, I believe, will get a refund. So that there was a wording of law which appeared to be a little confusing. So that they seem to have clarified. Then I don't know how far this is what I've heard is that in the previous law, there was a concept where telecom towers and probably the pipeline credits were to be over a period of 3 years. I'm hearing something like there have been changes in that. Whether they're going to be available or not is something that I'll have to read in fine prints. These are a couple of things that I've heard.
Yeah.
There are other small details that have happened in various sections, whether it's treatment of works contract and so on and so forth. So I really haven't read it. There are a bunch of people poring over each details because you got to map it to every clause to what it was there in the revised law and really read through every line because this has been legally vetted by the law ministry. So whatever you see now is the final interpretation or final outcome of what the law is. So I would say you got to wait for another at least 24 hours to 48 hours.
Sure, we'll give you the next 24 and 48 hours and regroup after that. But Pratik, let me come to you now. It's not easy because, as we pointed out, it's over 200 clauses that one has to go through and look at what the draft had said and what the current legislation states. But anything at all that stands out in any form or fashion as a red herring?
Yes, I mean, so a couple of things. One is that the definition of India now does not include Jammu and Kashmir. So that would mean that GST law as it is will not apply in Jammu and Kashmir, and what kind of law will apply
but that
in
was
J&K,
a given, Pratik. That was a given.
Unclear.
No, but that was a given from the start.
That was not given. I mean, at least the earlier draft, which was... No, not at all. I mean, in fact, if you look at the last revised law, which was released in November, the definition of India at that time had included J&K. So this is obviously a rethinking on that. And what kind of tax will apply there is not clear. And therefore, how will businesses plan, etc. I mean, that's something which needs to be clarified. The other point which is important is that they have included the definition of duty drawback. Okay. So drawback basically is a very simple scheme for exporters. And that allows you to claim a refund of, let's say, a flat percentage of 2 or 3 or 4%, depending on what kind of commodities you are exporting without really a need of a lot of paperwork. So it seems that they want to, sort of bring in the concept of drawback, which was not there in the earlier law, which is industry would be happy about that.
Okay.
I think SEZ point Hari spoke about. Telecom tower, earlier there was a specific clause to say telecom tower credit will be allowed. Now they have excluded that telecom tower and pipelines, etc. from the definition. So whether the intention is to give credit or not, one doesn't know. Now books of accounts, earlier you had to maintain it for 5 years, 60 months. Now you have to maintain it for 72 months. So it's a minor change there. And also, there is a concept of reverse charge which has come in. So if you're buying something from an unregistered dealer from outside the state, you may be required to pay tax under reverse charge, which was not there earlier. And one other point which is important is that if you go and buy a voucher, let's say if you go and buy a Marks and Spencer voucher, earlier the law said that it will be treated as an actionable claim and you'll have to pay GST upfront. Now they're saying that you don't need to pay a tax upfront because it is excluded from the definition of goods or service. And there is a separate schedule which says that it will neither be goods or service. That would mean that you don't need to pay tax on that upfront, and you pay tax later when the voucher is redeemed. One other last point, which is slightly micro but important for industry, is that earlier you had to reverse the credit if you had not made the payment to the vendor for 3 months. Now that 3 months period has been extended to 6 months, but earlier the reversal requirement was only in context of services. Now the reversal requirement is also in context of goods. So whatever you are purchasing, if you don't make the payment to the vendor within 6 months, then you're not entitled to claim credit. So there's another one which has come in. A couple of things on which clarity has not come in as yet. Transition stock, I think Sapna did mention about that. What will happen to the tax paid on the opening stock as on 1st of July, that's something which is not clear. Anti-profiteering, despite a lot of noise from the industry, continues as it is.
It stays.
So there's no clarity on that. What will happen to the what will happen to the excise-free zones and how those benefits will be protected is not there in the law, and also how the inter-office supplies will be treated. So, you know, if a Delhi office, let's say of CNBC TV18, is providing services to Mumbai, you know, how will the tax, you know, be charged? So those are things which are not there as part of the law. But I would say that you know, there are some critical changes which are there, which are important for the industry.
Well, thank you very much, Prateek, for highlighting some of the critical changes that have been made by way of these bills that have been moved in Parliament. Rohan Shah, I saw you, you know, looking at your notes and looking at perhaps what Prateek was pointing out and whether you have those on your envelope of changes that have been made or not. But you want to take us through the highlights as far as you're concerned from the bills?
Sure, Shereen. So under the CGST, you know, besides what's been mentioned by the earlier speakers, it's important that there are some exclusions from the levy itself. So for example, securities, there is now a change in the definition of services such that securities won't be included and will not, it would appear, therefore be taxable. Likewise, there is a situation where sale of land is clarified to be neither a supply of goods nor a supply of services. Then in the context of actionable claims, other than lottery and betting, these, you know, all other actionable claims are not going to be a supply of goods or services. So those three, I think, are very important definitional changes in terms of the very scope of the levy itself. What we're also seeing is now that we have a special legislation for union territories, supplies from one state to a union territory or vice versa, again you have a situation where that will be regarded as being interstate. So the concept of movement of goods to a union territory now sort of qualifies in the context of being interstate. What you are also seeing is, you know, three of the changes which were discussed earlier, important to sort of appreciate. One, that the exclusion of J&K has a big impact in terms of manufacturing units which were to be set up in J&K where you had exemptions. And people are in the process of also now setting up afresh a set of units. And to the extent that you were in the older regime, people worried that, you know, will there be a grandfathering or not. Now with the exclusion of J&K, it would seem that that set of activities will just be separately carved out, you know, totally. Likewise, this whole issue on duty drawback, you know, when you make exports, there is this whole situation of apportionment. How much should you get when you effectively export something? So let's say in the engineering sector, the issue may be lesser, but in something like gems and jewelry, because the use of raw materials is not always proportional or service is not always proportional, you know, the duty drawback concept will prove to be quite useful. The telecom towers thing, I wonder if it harks back to, you know, some judgments that we had, including the Bombay High Court, where they took a specific position in terms of telecom towers, saying it shouldn't be available. And finally, on this rate scenario, you know, they have reflected what they said, that instead of the 14 and 14 going to 28, we are now talking of 20 and 20. On anti-profiteering, may I just share that yesterday there was an interaction that some Bombay industries had with FM and with the Revenue Secretary. And, you know, there was discussion of how this sort of a clause has worked elsewhere, including Malaysia, where for 2 sectors they have it. What was heartening to note is that, you know, the reaction from the lawmakers was to say that, look, we are not going to treat anti-profiteering as some sort of tool to beat up on industries and scrutinize everyone. It's pretty much in the mode of scrutiny. It's pretty much in the mode of our just having a careful watch in specific sectors. And, you know, we are not going to use this to create another lever for the department to come chasing after people.
Okay, so that's an assurance, at least that's come in, maybe not in writing as much as in spirit there from the lawmakers. But Mani, you want to take us through what your highlights are on the back of what you've heard from Prateek and from Mr. Rohan Shah as well?
Yeah, sure. So I think to a very large extent, most of the changes have been covered by all the people who spoke before me. What I would like to focus are on 2 related changes which have happened in the last 48 hours, which to me are very, very significant and possibly are not being discussed enough. 2 days back, the government has made an expert committee, which very interestingly is based on industries. And they have identified various people who will be looking at the issues that GST will bring in for a specific industry. So the industries that they have covered, and I'm just reading from this, there is a committee for banking, financial and insurance, one for telecommunication, one for IT and ITES, one for transport and logistics, one for textiles, one for oil and gas, one for gems and jewelry, one for services received and provided by the government as well. And now this has come in the form of a CBEC office order. And the team of people who have been tasked, they have been named in this with their designations. And what the government has requested all concerned is basically to reach out to these people so that industry-specific issues can be taken up by them. Very critical point and very good thing, you know, as far as most of us are concerned. The team of people has been given time only till 10th of April to finalize their recommendations and forward that, which means that anyone, if anyone who needs to make a representation or needs to make a suggestion, needs to go to them possibly before 5th, 6th or 7th of April, which doesn't give people too much of time. The reason why I mentioned this is when we look at this particular measure in the context of the fact that this office order was released virtually simultaneously with the CBEC uploading the GST law on their website. Both of them, I believe, happened on late night on Friday. Now, that to me signifies that the government is even now willing to listen, and therefore, if there are a few issues that business would like to be taken up, this is the right time. There now seems to be a renewed focus from the government to proceed on this industry-wise. Yeah, and industry-wise. I have not seen them approaching issues industry-wise for an indirect tax in the past, for instance.
That's a good point that you make, Mani. And in fact, over the weekend, we also saw the government put out the order about the reorganization of the CBEC itself. But Mr. Lakshmi Kumaran also with us on the phone. And Mr. Lakshmi Kumaran, in any form or fashion, have any of the reservations or apprehensions that you had when we last spoke with respect to the GST been allayed on the back of a reading of the legislation, sir?
I don't think so. One of the major things which we are talking about is the central registration for the service providers providing services in various states, and there is no respite. The law does not talk anything about that. And then that is one important thing. The second thing is introducing the payment of tax on a reverse charge basis wherever there is a supply from unregistered dealer to the registered dealer. That is new addition now, and that is going to create a little problem, especially when they have been excluded from the category of GST, and therefore the the dealers who are making payments from there, supplies from there to India, to rest of India, would mean that they will be unregistered, and then there will be requirement of payment of reverse charge on the person receiving the supply of goods or services. And that is going to create some difficulties, especially it will be more or less like import of goods from other countries, because they are again going to pay the IGST as a reverse charge. So that will be the treatment of goods and services coming from Jammu and Kashmir. One of the things I saw was the new definition of agriculturalist in the definition clause, where it says it is by an individual or an individual family who cultivate the land by own or by own labor or by own servants. That would mean that mere agriculturalists who are doing personal job alone will be excluded. The corporates who are doing the agricultural job through the contract labor, etc., they are not excluded, and therefore they will be required to take displacement, etc., etc. So that will be an important thing which I wanted to note. And then works contract was deemed as a definition of the services earlier under the model law. Now they have set it as a composite supply. The minute it becomes a composite supply, then the whole question comes whether it is a dominant goods or dominant services within the dominant goods, which attract higher rate or lower rate, etc. All those questions are going to come. And therefore, we are revisiting the issue relating to works contract. I thought it was remedied earlier, but I don't think so. And then...
All right, so...
Please go.
I'll come back to Mr. Lakshmi Kumaran, but you've pointed out some very critical issues that require clarification. You've zeroed in on the definition of agriculture, the works contract, which now falls under the composite supply category, and some of the other issues pertaining to what Pratik and Mr. Shah also pointed out, with J&K being excluded from the GST. But Arun Giri, our partner in crime, also joining us now. Arun, anything here that's left unsaid?
I think a few points, Shereen, and I'll touch upon one of them. I spoke to a few CFOs, heads of tax, before just coming in here. They are saying that we need time. They are a little worried, a little anxious about the July 1 timeline. They say that through CNBC, can you tell the government that we need a little more time? Number one. Number two, for the first time in a generation, as CBC Chairman Mr. Najib Shah said at our Tax Sutra and CNBC GST Summit last week, that the industry preparedness is clearly way below where it should be today. It's surely way behind the government. Number two. Number three, are the IT systems geared up? That's a point that quite a few people that whom I am talking in the corporate world are asking, that the IT preparedness right now, the sort of, there are amendments like Mr. Lakshmi Kumaran, Rohan Bhai and others have pointed out. Now, for the IT systems will now have to be geared up to reflect the changes that have been made in the GST bills. So that is quite critical. Again, that's why they're saying July 1 needs to be reconsidered. Number four, migration. There are a lot of issues relating to registration, relating to migration, which also need to be addressed. Number five, I think now the turf war will move to place of supply, time of supply, classification and rates. I think that is where you're going to see a lot of lobbying now on the classification, on the rates. We must look out for, as Mr. Mani said, the working group recommendations. Number six, Shereen, this I must share without taking names. Renowned industrialists in the country have written to the Prime Minister directly on GST, expressing some concerns. In fact, very surprisingly, they have been taken on board and reflected in some of the actions of the government and CBEC in the last 3-4 days. So as Mr. Mani says, right, if some of the top industrialists in the country, among the top 5 or 6, are writing to the government at the level of the Prime Minister, expressing some concerns, they are being taken on board, Shereen. That's quite important.
Well, that's good to note, Arun. Gentlemen, we are going to take a break, but we've covered a lot of ground here in the first 30 minutes of our conversation. We've got 30 more, but when we return, we'll talk about some of the unfinished agenda and some of the concerns that have been raised by each of you. Stay on with us. You're watching our CNBC TV 18 GST special. We're back with you in a moment.